Hey everybody, welcome to Trading Capital's exclusive analysis on the price action of lumber. We're going to be discussing what we see technically speaking and then what the technical signals could be telling us in regards to some important economic data that we're having tomorrow. Tomorrow at 10 a.m. we do have the existing home sales data, so it's going to be market moving for interest rates and certainly the price action of the real estate sector and this underlying commodity lumber. Overall, lumber has had a massive disinflationary fall over the last couple weeks. After we touched base on this massive inflationary rally, we were on the camp that likely inflation was going to uptick because of the price action in lumber and copper, as seen in our previous videos. Now that basically lumber has had its rally and has had a great fall in recent price action, what this could be telling us is that potentially the existing home sales data that comes out tomorrow, the markets could potentially be taking that negative. And if they take it negative, we would often see the yield spike and interest rate spike. So it's really going to be crucial in terms of the market reaction as tomorrow's report at 10 a.m. But based off of the price action of lumber, which is one of the most commodities used in building a home and new home construction, this is basically indicative and showing that there might be a lot of weakness in the actual real estate sector that is definitely approaching. They say price action always leads the fundamental news, and perhaps this weak price action over the last 3 weeks is foreshadowing a market that takes the existing home sales data tomorrow poorly. Now, a couple levels to watch. Obviously, on the daily chart, we're retracing back to this trend line. Notice how we broke out on lumber here. Now you've done a full retrace. If you lose that level, lumber is very vulnerable to making new lows. And based off of the longer term price action, this topping formation on lumber is extremely bearish. You've had what is known as a retrace back to the breakdown zone. So over here, you got a retrace and you got rejected, and you've seen 3 weeks of consecutive selling. And this is signifying this larger M-top formation, which is triggered, and you look to be trying to fall down. The max calculation, believe it or not, off of this pattern takes you all the way down to about 130 or 140 level. And those levels we have not seen in the price of lumber since the 09-08 housing GFC crisis. Now, I'm not saying that that's the base case scenario. It's certainly not the likeliest probability, and there are going to be bounces in the price action of lumber. But we certainly have to know as professional traders the downside, the possibility of a pattern playing and completing the full downside move. A good trader always knows the risk to reward ratio, and by identifying the likely downside, since this pattern has triggered and confirmed on a larger time frame, it does open up the probabilities that the price action is showing on a technical basis something lurking very negatively in the abyss of the real estate market and overall potentially the whole financial markets. Now, big level, obviously, do we start losing this trend line tomorrow off of that housing data? I will certainly be watching things as they progress tomorrow at 10 a.m. when that data series comes out.